Okay, good evening, guys. Welcome to this live trading clinic. Tonight, it's all about the Fed. So there's been a few reasons why the market's been so volatile today. Let me just go through the standard risk warnings, etc., and then we'll concentrate on the markets and what we expect the Fed are going to announce tonight. So before I start, as always, I need to read the risk warning. The spread betting security trading covering high risk your capital, resulting in losses that exceed your initial deposit. You may be sued for everyone, so please ensure you fully understand the risks involved. Now, the information and comments provided here under no circumstance to consider an offer of solicitation to invest. Nothing here should be construed as investment advice. Information provided is believed to be accurate the data is produced. Again, education only. Content of webinars, personal opinion of the moderator on intro.com. Content does not constitute financial investment or tax advice. Intro.com is not and liability of the content following during this session. So what we're going to do, a little bit different tonight because we're specifically targeting the Fed. I'm going to show you multiple time frame trading. So that's just, again, looking at the data in the right kind of way, purely focusing on the fundamental data that comes out. But remembering my 80-20 rule that the markets move 80% technical, 20% fundamental, but a 20% strong fundamental move will still trade technically. So it's all one of the same things. Traded the Fed last time. I've traded many things live for you. I will always put my own money on my own interpretation of the markets. Again, what's the point of being a professional chief market strategist and educator if I don't put my money where the mouth is? And that's what I think separates me from some of the other guys out there. We'll go through my particular view on the Fed today. But again, if I do see something that I feel will move the markets and is worth trading, I'm going to trade it. Because at heart, I'm a trader. Okay, so we're going to look at some markets now, quickly. Just look at the main markets. I've been kind of focusing on the pound versus the dollar. We're looking at cable today, so that's the center screen. Also been looking at gold on the left and the S&P on the right. So gold, when this news of the unexpected rate hikes, came from South Africa and Turkey and all that kind of stuff, it starts to bring fear in the market. And when you get fear in the market, it breeds contagion. So fear means that people go to a safe house. So we've seen the Swiss franc rally today based upon other currencies because that is a safe haven. We've seen gold reach these highs, not for any other reason that people still see it as a store of wealth and a safe place to put your money. Okay, so we've seen the S&P and all the major indices really kind of head heavily south. The FTSE is currently 83 points down. The DAX, again 189 points down, and the S&P really still falling, down at 220. So the markets took all this information on board this morning, traded through it. The US market opens and we continue to move downwards. So we're at a bit of parity now, I'd say, with gold. But we just have to always concentrate on gold because it's not just the individuals that will trade FOMC minutes. Think about the central banks. Think about the big players out there. There could be some huge shifts in gold depending on what is said tonight. This could be. I know everyone says the last non-farm payroll was the biggest figure in a year, etc., etc. Depending on what is said today is going to set the tone for the next 6 months, certainly. So we could see some big moves happen today and then, follow through in tomorrow's trading and throughout the rest of the month. It's that big what's said, what's going to be said today. So S&P has continued to trade near the lows. I mean, just again, put them in context. Let's look at the daily chart. So again, I mean, it certainly has more room to sell off if we look at previous, kind of selling days. But we've got some big levels to concentrate on. 1772.5 is certainly a good bottom. 1761. And once we break that, okay, there's no real support until we get to these lower ranges of 1740, 1733. So potentially, we could see a double move. The market could easily move 320 ticks. It could easily move if it wants another 300 ticks. So a lot of downside potential here. And again, we're getting back into the range. I mean, we're not really near any key fib levels. We've seen this long sweeping up move on the dailies. But the last time we tried to test lower, I would say we really found support here. So realistically, we're trading well below the 50%. We've touched the 61.8 as resistance perfectly. So this market wants to close below the 100%. So the 161. And again, I can't keep going on about how important it is to look at your time frame trading on the right time frame. I mentioned 173.350 was the key level. Well, that ties in with the 161.8 overextension. So the market's telling you that it wants to go lower. It's closed below the 50% of this up move. Okay, it's tested the 100% and it's trading towards it. So it wants to break through. It wants to get down to 173.350. Okay, so the market's telling you all the time what he wants to do is close below the 50%. It's already tipped its hat. If he wanted to make new highs and rebound, the S&P would have done it by now. It's had every opportunity in this bounce of the 100% here, but it didn't. Today it's opened and come back down. So maybe the fundamentals are taking over a little bit. Maybe the fundamentals are making it a bit too jittery for the market to kind of cope. But, in my opinion, we're massively overbought anyway. The world, although the analysts are talking up Europe is fixed out of recession. The US is fixed. It's, it's all about the growth. It's not. All we've done is built our foundations on sand, pumped it full of quantitative easing money, and when the people, if, again, the data today, this gives the clue that the quantitative easing of free money is out the markets, then the market can do nothing but retrace, okay? So that's an interesting little kind of view of the, the S&P about the high time frame trading that I often preach about. So, I'm getting a few things coming through. So, Arinda wants to look at the pound versus this what? Okay? Everyone seems to want to look at the pound. Well, the pound versus the dollar here. Okay? So, what we've seen is the market aggressively sell off. Okay, gap back down. We close that gap, and the market really, on these hourly candles, looks to want to push higher. We look at the daily charts, we're still in this, quite nice. Sorry, that's wrong tool. This quite nice bullish trend. I mean, it's quite simple. Every time we get towards, a big gap here where we hold the Bollinger Band and push higher, although we see these wicks on the dailies, we're still continuing to make higher lows. Market comes by, again, wick. Real support here above 163. The market's gone on to go higher. Now, again, my analysis you can read on FX Street. I've said it's going to go higher and continue to go higher throughout the year. So this ties in. Okay, we might see a bit of a dip towards Christmas, I said, and that's what we saw, but the market's only going to get stronger. And that's due to different views I have about the state of the UK economy. And although Carney came out today and said that, even though the UK unemployment rate is getting close to target, we're going to keep interest rates low. Carney doesn't know what he's talking about. I'll be perfectly honest. He's been a massive disappointment. And for the Governor of the Bank of England, he's a bit of a letdown. So anything he says, I have no faith in whatsoever. Since day one he came in, he could have been strong, set the forward guidance, give us a clue what's going to happen. But he's not. He just wing and prod it, made it, followed the Fed. So I don't care what he says, to be honest. The pound's going up regardless of Mark Carney. So I can see that we might sell off depending on what's said today. But again, I'll be buying over dips in the pound versus the dollar. That's for sure. Gold's one I'm keeping my left eye on because gold can go wild today. Okay, let me just run through what's expected. Now, I'm the only analyst on FX Street when polled said there's going to be no taper today. And that's based upon a few things, a few more kind of psychological things, rather than kind of, just because they've started, stimulus, they're going to finish. Now, if you listen to HSBC think that we're going to taper by a further 10 billion in this meeting today, and then do 6 further tapers of 10 billion until there's no taper. Okay, I can kind of get on board with that. We've had people out of the Fed, saying that we're going to have gradual, measured taper. Again, this is the stress of it. We're going to have gradual taper, only depending if the data's good. Now, we all traded the non-farm payroll, I'm sure, 74,000 that it came out, expected around 200,000. So that's a massive kind of mismatch. Now, is it going to get revised up? Yes, I'm sure it is. Is that enough of a worry to stop the Fed in its plans? Probably not. But it's Ben Bernanke's last kind of job as, chairman of the Federal Committee. Yellen's going to come in and have her own set of problems and her own things to deal with. So the figures we're looking at right now that are going to be in focus, Fed, are they going to taper or are they not? Okay, if the Fed taper, got to be careful. If they say yes, then we could see a continued sell-off in the markets. But then we see nothing happening. Okay, there's no taper. Then we could see an even stronger sell-off in the markets because that means that the Fed are likely to keep to this 6 times 10 billion reduction, and the S&P market's going to sell off. Now, what's that going to do to gold? I don't know. It could go into free fall. It just depends how you view this data. I view it if the Fed has the confidence to continue on its mission to taper till nothing, then that's really good news for the market. But however, traders will see that as negative and will sell, that free money out of the market. Gold is one to look at for me. If gold starts to, take this news as the Fed is set, is going to keep its track, then we could see easily in the next couple of months, gold bottoming out at $1,900. Okay, so getting some more questions through. The Aussie dollar, okay, well, the Aussie dollar now is going to trade in mid-range, okay? We've bounced off real good support at 0.87267. We're just at the moving average. The Aussie dollar, again, it depends. If this is really bad news and the market takes it as bad news for the dollar, then the Aussie's going to soar. We can see the Aussie today get to 0.88306 and 0.88469. That would be what I'd be looking at. Xavier's saying, would further taper devalue the Japanese yen? Well, it could possibly. Again, it depends how you view it. Okay, I think that any taper today will be seen as strength. That we have confidence. So the strength sells the dollar currencies against the dollar. In theory, it should push the dollar up because people demand more dollars because they've got that safety and security of knowing what the Fed's going to do. So the Fed tip the hat and taper now. They're not going to be able to stop. I'm the only person thinking they might just have a pause and say no taper and let Yellen take the reins and bring in that clarity, bring in that vision, bring in that forward guidance to again, we're only just new to this quantitative easing thing. It's a new thing within our vocabulary. So what's not to say we shouldn't give Yellen your first crack of the whip and let her have a year or 18 months to unwind quantitative easing? If we do it now, there's all the worries about the emerging markets, the global economy. It's very, very difficult to say what the Fed's going to do. So what I would say is be very, very careful trading today. Already we're seeing gold spike. Okay, so gold is spiking up. It's gone up 60 ticks or so. What do you think the bias is for that then? What do you think the bias is? Does that think that the Fed are not going to cut? So that's seen as kind of bad news almost. So that the market's spiking up. It's so difficult, guys. What we're going to have to do is be very, very cautious. So I'm going to look at the hourly charts, okay, for this figure, just because I'm going to see some massive movements. That's why I'm moving out the ranges for things. Okay, so I'm going to say as much as I can, as quick as I can, based upon what I hear over the wires. And what we're looking out for today, will there be the 10 billion of quantitative easing? If there is a further 10 billion of quantitative easing, okay, now that will initially, in my view, it should send the S&P down. Will it then bounce and go up? I don't know. But you have to be careful how you view this. Tapering is seen as bad for the markets, okay, bad for the dollar. So we have to keep an eye on the left on gold and keep an eye on right on the S&P. And just have a mid-view of what the pound might do against the dollar, because that's had a lot of volatility. So good news is in the eye of the beholder here, guys. It's not as clear-cut as a quantitative easing cut is a sell, because last time we saw this, the market didn't really take it as well as we might have thought. So a lot of room on the S&P on the downside, regardless of what happens. A lot of room on gold on the upside, regardless of what happens. So what you have to get an understanding of in your mind's eye is that don't try and hit. You can do what you want, you're the trader. In my experience, in my opinion, don't try and hit the first wave move. We'll look for the initial spike on the hourlies, and if I feel it's appropriate, I'll move to the 5-minute candles, see that 5-minute close, and then we'll trade a continuation or reversal pattern. You're going to see a spike no matter what happens. Okay? No matter if the Fed says very, very little and we don't see a taper, we're going to see a spike in some of the markets. And that's because people will be unwinding positions. Okay, so we've got 2 minutes now before we start getting this information from the Fed over the wires. Personally, I'm expecting no taper. If we see no taper, then we're going to see some wildness in gold. That's what I'll focus on. If we do see a taper, it'll be interesting to see how low, in my opinion, the S&P will dip before buyers start coming to the market. Got all the key levels here, so they're all there on my screen for you to see. All these dotted lines are my points of interest. Okay, so they're all there for everybody to see. Like I said, gold got a long way up to 1279, or 1224 on the bottom even. We just don't know what's going to happen, all right? So we've got a minute now, guys. So understand, the call's going to be quantitative easing or not, taper or not. Then we're going to have to watch the markets go wild, and then I'll go to a 5-minute chart if applicable and trade accordingly. If I see a good call, I'm just going to shout it out. If I start trading, I'll tell you where I'm buying, and I'll tell you what's happening. Difficult, guys. Be safe, trade the right kind of size, and just be aware that not everything will be as it seems. Okay, I'm going to go quiet until the announcement. About 30 seconds. 10 seconds. Okay, gold's retraced all its losses. Watch for a spike upwards. 1279 top target. Okay. Careful here, guys. Not really reaction in the S&P at all. Cable's done nothing. No real move in the Aussie dollar. No real move in the euro dollar or the dollar Swiss. Okay, so we've seen absolutely nothing happen just yet, guys. So just be very careful. Okay, well, the vote was 10-0, so unanimous. So it looks like that the Fed are probably going to continue with the stimulus reduction, quantitative easing. I mean, just look at S&P now taking a slight turn towards that low. I mean, this is what we've got to kind of think in our minds over the next kind of 5 or 10 minutes of what people are building opinion on. If the Fed are going to continue down this stimulus, then they must have confidence in the economy. But again, taking another 10 billion out is the lowest they can do. So that's why the markets are not really reacting, because nobody knows if this is actually good or bad news. I mean, it's amazing that the markets haven't really kind of reacted at all. I mean, I'm seeing a sell-off now in the Aussie dollar. Okay, so look for that 0.87267 level to be tested. If the Aussie continues to weaken against the dollar, it's going to hit 0.86692. So watch these lows to be hit, because again, this is seen as good news. Okay, because the quantitative easing has been tapered, and the market's not seen it as free money being taken away. So it's seen American strength. So that's why we're seeing weakness come into the Aussie versus the US dollar now. So again, look for them lows to be hit, guys. And again, if we see a severe break through them lower Bollinger Bands, we can see that maybe 0.86692, could be where the market gets down to. So gold again went up 50, 60 ticks before the announcement. I guess we're not going to hit the ranges now, so we can just zoom in the charts a little bit. So, I mean, gold, as I said, was something to keep an eye on, because gold is a real kind of measure of fear. So the market's gone up 60 ticks, and then, down another 49 ticks. We're right back where we started. So again, if gold is taking that as good news, there's safety. There's good news coming out of the US, so gold might continue to sell off. Again, Aussie dollar's rejected, so it's just kind of bouncing off them lower levels. Everything's coming back to the range. So what I'd be looking to do, guys, is just, if you are going to trade anything, pick that kind of directional trade where you're going to get the boundaries, okay? Don't try and trade the market for any kind of long, overextended breakout. What that kind of news just shows is it's very benign, okay? So nothing really out of the ordinary has happened, but then nothing kind of particularly interesting has happened. There's nothing to gauge and build any long-term decisions on the snap. So you can see a bit of strength coming back into the S&P now. So again, if the Fed are going to measure, okay, their quantitative easing and then the tapering to 10 billion every time, we know where we stand. So we know that we're not going to come out and suddenly say 50 billion of taperings wiped off the market. So that's why you could argue a little bit of strength might come back into S&P. We're trading off the lows. Ooh, tricky one. Gold continues to kind of edge downwards, giving me the indication that maybe the markets finally think that the Fed have got things under control. I know there's all these worries about the unemployment rate, what's happening by these unannounced interest rate hikes. But if gold continues to weigh down, okay, then I definitely think we're going to see a bit of a bounce in the stocks. Remember, we've massively overtraded. The DAX and the FTSE are both coming back off the lows, not aggressively, but they're certainly coming back. So I think for me, gold. All right, guys. I mean, what do you think? A few people are asking my opinion on the dollar yen. Seems to be a popular one you guys like to trade. So let me just bring that up for you. Okay, well, dollar yen. I mean, we can see that the dollar's on the back of that quantitative easing taper is gaining strength. So we've hit the lows. And again, that means that you have to interpret what you think the data means. To me, that means that actually the Fed have not kind of bottled it, okay? They've said to themselves, well, we started that reduction plan, so we're going to have to see it through regardless. We know that quantitative easing has to be taken out of the market. But we're going to do it slowly, and we're going to do it steadily. Although we had a bad non-farm payrolls, disastrous non-farm payrolls, even the way the market traded, okay, the market didn't continue to sell off. The market actually went on to make higher highs. So everyone believed that was an anomaly, and it wasn't going to affect the Fed's decision. And we can see that really the dollar strength is coming into the market. So I'd say any break above 102.314 takes us right back to 102.627 and then the 50%. So I would say over the next kind of couple of days, if the market continues to take this as good positive clarity and strength from the Fed, we quite easily get back to 103 and start to retest, these highs, and certainly retrace this gap that we see between 102 and 103. So what about this statement? Okay, well, the statement just basically says that although the data, from the non-farm payroll was bad, it wasn't terrible. What they concentrate on is that they're trying to get the US unemployment rate down to 6.5, and that's really the main target. What they're not saying is that they're going to, increasingly aggressively taper. They'll just taper as and when the US seems to be on track. And, again, I like to be kind of negative in some respects, because I just see the problem for me with unemployment is we're only short-term fixing things. We're not fixing things for the next generation, the next 2 generations. We're just plugging a big hole by quantitative easing. So as that quantitative easing unwinds, these high levels in the S&P and high levels in the dollar are going to have to come down. But we have to trade in the here and now. So right now, the dollar versus the Japanese yen, again, we're going to find support down 102, I think, and then it's going to hit 103. That's where it's going to go, unless something changes. S&P's taking a slight bid. Gold's, again, not really done anything. It's just bouncing around. The Aussie dollar's bounced off the lows. A little bit of a bid, a bit of strength on the dollar versus the Swiss. But nothing's happening. Nothing's come out. Again, I can only interpret the markets where I see them. I've traded for over a decade. I've traded many, Fed decisions, Bank of England decisions, ECB decisions. And generally, there's a bigger spike than this. The gold should have come down. It should have gone up. It should have come down again and been much more kind of fluid and aggressive. Again, a bit of weakness coming into the S&P again now. The majority of the market is selling off. So remember, the quantitative easing in its basic form, it's like heroin to the market. So as that's taken out of the markets, the free money's gone, so it has to come down. I'm hearing nothing off the wires. I'm hearing nothing off any other analysts that are saying anything else. So realistically, I'd be buying these dips in gold, and I'd be continuing to let the market sell off, because that's naturally what should happen, to be honest. So really, maybe, let's just do a 5-minute chart just to see exactly what, gold could tell us here. Okay, so we see that big spike from the high to the low. So realistically, if gold closes significantly above this, it will make a higher high. If gold on this 5-minute chart significantly closes below it in the next candle or the next 2 candles, it's going to make a lower low. So my kind of view is that I think the markets are going to start to say, right, well, there we go, gold's spiking now. I haven't bought any, but the rules are that if it closes above this in 2 minutes, it'll have to make a higher high. That's Fibonacci. So the markets, the S&P is continuing to move lower. Got a big level here at 172.250. Again, you could see some stops get taken out. So keep an eye on the right. But we're going to have to wait for this candle to close. I don't know any safe place to get in. I'd just be punting if I bought gold now. But my rationale is that if stocks go down, gold has to kind of go up. And if quantitative easing is taken out another 10 billion as expected, then it's gradually, each Fed meeting, going to go down. So the free money goes away, stock markets have to come back until real value is found. So very choppy, very difficult. So just wait 1 minute and just see where this next 5-minute opens on gold, and that would give us the indication. I would say if it opens above the 50%, then we're going to see a new high. Okay? So, but then, you look over to the S&P, we trace all them losses. So just 1 minute until this 5-minute scenario, and let's just see how that trades. So again, rest of the currency is doing absolutely nothing. Cable's done absolutely nothing. So right, we open up now. We've opened above the 50%, so it might come back to test that 50%. But if it continues to go high and make a higher than this top here, then Fibonacci says that really it has to make a higher high. So, does it always happen? No. But again, I'm only telling you things that I've learned over the years. So that'd be 51 ticks. If we close below the 50%, we've got 74 ticks. So it's going to have to do something. I'd say that it's probably going to come back to the 50% maybe first. And if it doesn't find a selling inertia in that 5-minute candle, then we go up to make a new high. Okay, so that's real-time charting, in the only way I know how to do it. So I'm going to keep an eye on the S&P. If that continues to go down, I'm going to buy gold just off that. Okay, so still seeing a little bit of weakness. Again, we see, the US technologies, the kind of Nasdaq seems to generally lead things. That's starting to go. So what's your consensus? What do you think, guys? Do you think gold's going to go up from this point, or it's going to go down? Again, it's going to move quick, so we just don't know. Okay, well, very, very choppy, isn't it? Very, very choppy. So we're going to have to, just play it out. We've still got another 4 minutes. Okay, so it might take a lot longer, because we've not seen that volatility for the market to make a fresh high. But keep your eye on that 50%. So as long as it closes above that, then in the next 15, 20 minutes, half an hour, you would expect gold to make a higher high. Might not keep on to it, but it should do. I mean, that's Fibonacci. It's not my rule. So gold's spiking now. So second it spikes, it gets sold back down. So very difficult to be able to get involved in these moves with any kind of security. Again, weakness now coming back into the Aussie dollar. They might test that lower at 87267 another a second time. Again, watch for what the S&P does. S&P's at its coming towards its lows. That could continue. The rest of the market seems to sell off. So again, you have to be constantly analysing what every other market is doing against each other. Right now, they seem to be testing the lows, spiking back. There is no real direction. So you have to let your technicals kind of take over. And as I said, it might take 15, 20 minutes, half an hour, whatever. But the 50% level to me looks like gold could be going longer. But, and here it goes. But where'd you get involved, guys? Every time you try and get them highs, bang, 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 it's sold back down. Very, very difficult. Very difficult. So, again, Aussie's creeping towards the lows. We've seen a bit of a sell-off now in the euro-dollar. The euro is now gaining some weakness. So, 1.36190 would be a level that I'd look for the euro to hit in the dollar. Well, I mean, taper it is strong, the dollar. I mean, because obviously the Aussie and the euro are getting sold up against the dollar. So that's dollar strength. That's what you're seeing right there. Not really anything kind of, again, I can't believe cable's not moved at all after all that movement we've seen today. But the S&P still towards the lows, nothing really of anything to write home about. Again, if gold, because you're used to seeing gold break, and do these candles so bigly, big in volume. It's very difficult to trade them like this. And when they see it go up and they chunk back down with people taking profit out of the market. But, I mean, the other argument might be if we reject the short-term, break of the high, then it's going to have to make a low. But I would still feel that while we've got all these bulls remaining in the market that have taken all this profit, we're going to have to see a new high made in gold at some point in the next hour of trading. So a lot of people saying gold 1271. I'll go with that. I'd say 1276 and 1279 would be a target for me. I don't know where you get the 1271 from, but yeah, absolutely. There's nothing there on my charts. Okay, Greg was just seeing euro dollar fall to 1.3542. Yeah, 5475 is mine. So that types in. Ah, yes, Abdul, you wanted to be heard. Sorry, I was just reading the last thing that we saw. Don't do that, Abdul. That's naughty. Don't make me block you. If everyone wanted to listen to what you thought, they'd log in and they'd listen to you trade. They won't listen to me. So don't do things like that. It's not fair to the participants. Okay, so Will's asking, Steve, can you explain again why the investors holding the US dollar move capital to Japanese yen as a hedge, as you stated in previous webinars? Okay. Well, you have to remember that the Japanese government holds huge reserves of the dollar, so it's not just as clear cut of trading the normal currency outcome that the dollar is stronger than the yen. By competitive devaluation and keeping their country competitive. What the Japanese love to do is devalue their currency against the dollar. Now, if they have big reserves of the dollar. They have more power than the federal government to change that price. So when you see these overextended moves in the dollar versus Japanese yen, it's not necessarily individuals or institutions. It's the Bank of Japan, battling it out to make sure that its rate of exchange is favourable for the way it works. It relies on money coming in from overseas. It relies on its exports, so that its currency has to be relatively cheap in order to provide the best return for investors to buy goods in their country. So it's very difficult, I would say, to trade the dollar yen. A lot of people like to trade it because it is quite technical in some respects, but I find it a very controlled market. I like the freer markets. I like to trade the markets where it's not so heavily controlled by the central governments. And they have a hand in everything, don't get me wrong, but realistically, if you're trying to take on, a bull move or a bear move, and the Japanese, central government, they are behind it, there's nothing you can do. It's going to push you to every level you think logical, and then push it 2 more. So it's very hard to trade if you're on the wrong side of the direction. So I'd say basically what you have to think about is this good news for Japan? Okay, that the dollar is going to get stronger based upon, the Fed tapering, therefore everything's under control. Keep an eye on this 177250 level in the S&P. That we could see some movement at the lower. So really, realistic for me, what I'm thinking is when you trade the dollar against the yen, it's where does Japan, where does the central government see value? If they see too much strength coming into the dollar now, they're going to hammer it down, okay? Because they need to keep their peg in line. Does that answer what you're trying to say? Okay, so again, Gregory's saying I'm right, the euro fall against the dollar. Xavier's saying in trading, the US dollar since March, and I think just trade it on the QE. Yeah, absolutely. Wait for dips and then buy the dollar. Okay, right. Yeah, okay. Well, I mean, unfortunately, I can't control the data. So, yeah, if the markets don't do much after the Fed, unfortunately, I'm just a market commentator. I'm not in control of any kind of policies, unfortunately, for the rest of the world because, I think I've a little bit more switched on again. Watch this bottom in the S&P. Just see, we could see a massive, when the market builds up like this, you can see it look for next levels. 1761 is the next place it could test. So we could see the market really set up some stops down here, or just reject it, then we get back into the range. So this is where your technical levels start to come over now. Nothing's happened really on the back of this Fed announcement. The market wants unexplained things. It wants more fear. And if the Fed are going to stick to this, ruling that, there's going to be 10 billion. What's gold? So gold's heading towards that previous 5-minute high. Again, it's going to have to make a new high if it's, closes above that 61.8 now. Okay, so we might not do it in this candle, but we've closed above the 50%. We're going to close preferably in the next 2 minutes above the 61.8. And if it does, gold makes a new high. How high it goes, no, I don't know. But we're seeing, Fibonacci in play. Very difficult to get long because every time you try and get long, the market spikes back. But that is just, that's just what we're seeing in the market. So, realistically, I mean, you tell me, guys, what have you seen? What have you seen that's worth trading? Gold? I wouldn't have bought it or sold it, when it was moving up and down. I realistically should have bought it above the 50%, but do you know what, guys? I just don't take risk in these days. I've just got too much to lose. I just don't. It's just so difficult to get involved in the markets when they're this choppy. There's literally a handful of people are trading, and big guys. Look at that. Gold has just been taken out 30 ticks in a straight line. How can you keep any reasonable view on that? And it's coming back now. It's just too difficult. Just too difficult. Well, yes, I mean, I could have bought gold when it was above the 50. I could have made a cheeky, 20, 30 ticks out of that. But, you just, not seeing that kind of strength in the other markets or weakness in other markets kind of, back up, what I'm saying. I mean, I'm just going off a technical study. Listen, if it keeps above the 50%, it will make a higher high. Okay, how long it keeps that high for, I don't know. It's just Fibonacci. I'm not telling you anything anybody can't read upon the internet. Fibonacci is just Fibonacci. It's based upon this high to this low. People might be looking off just this green candle here, but I'm not. I'm going off where the high of the market was, where the low of the market found value. So market is going to come down. It's going to test 61.8 and then test 50, then make a new low. Or, as I keep saying, the more it holds above 50%, the more it has to make a high. Even you might buy it here and get out here. I don't know. It's entirely up to you guys. All I can say is, Fibonacci, in my experience, once it closes above that 50%, it looks to make a new high. But these are very strange market conditions, aren't they? Oh, how will Asia react to this tonight? Well, yeah, very good question, Forrest Gall. Always good to see you. Well, I mean, you could see it in one or two ways, really. Realistically, you could see that this is good for Asia because it's that certainty. It's that certainty that Asia require because they've got, remember China, they've got a 100-year plan. They don't want, the kind of, market to, drop out, and the Fed to say, yeah, we're going to quantitative ease by 20 billion, then 50 billion, then it's all done. Because that brings too much fear into the market and fear is contagion. Japan and the Asian market want to know that the US and UK and Europe are solid because then they buy more things and they can build a plan based upon the consumption of the US. So they will see that the reduction in taper is actually, fairly sensible news. Okay, nothing irrational is going to happen. So I think probably the Nikkei will start to gain overnight, and we'll probably see the Nikkei move into positive territory. That's what I would see. If it stays there, I don't know. You just don't know. I mean, it's just not normal market conditions. Every time we see a spike in gold, it comes down. If it stayed long, you're still laughing, but again, we're pretty close to making the new high, aren't we? If you go long 50, you'd be 44 ticks on side, 65 to make new high, then maybe it'll tank. I don't know, guys. It's too difficult. It's too difficult to trade gold in these kind of conditions. So we didn't see the big breakthrough, I thought, at this level down here, but we've got a good 30 ticks down. Could go down another 113 ticks? It's looking unlikely. Don't put that in again, Abdul. We're not interested about gold on 1271, okay? So, well, as I say, look at the Nasdaq. That's really pulling things down. I say that's a good leader of the indices. That's nearly 530 points down. So that's going to continue to drag the rest of the stock markets down. That's why I still see a potential bid and gold making this high. It's going to be massive anticlimax when it makes this high. It's probably going to then, go back to the mid-range and back to the 50%. But I'm only telling you from experience, what happened. Wall Street down 270. The Nasdaq down 531, sorry. Germany's down 220. The FTSE now in triple figures down 100. So the more that comes in, the more you'd expect, gold just to bring a bit of a bid and that safe, safety, buying into that safety coming back into the market. Well, gold, yeah, and the Aussie are not correlated, they're inversely correlated. So as gold goes up, again, it's the dollar. You can say that, the euro dollar is inverse with gold. Again, remember that gold is priced in dollars. So, if you see dollar weakness, then generally you see gold go up. But again, the market conditions are so different, are just so different now, so difficult. I used to sell the gold based on the back of stocks going up. But now, if you watch sometimes, gold will actually follow the stock market. So as the stocks fall, gold actually starts to fall. So these correlations never last forever. Okay, but the basic fact of the matter is there's a lot of gold out there, and gold is priced in dollars. So you will see the dollar pairs have a correlation with gold. So gold again, 1, 2, 3, 4 times tried to make this higher high and haven't done it. So the market is selling off. So where's the target going to be? The 50%. If we're going to see this 50% of these highs now rejected, we could see gold come all the way back down. But I don't know. Again, base it on the S&P. S&P's now rejected the lows and going back up. It's just funny money trading. Do you want to buy on the 50%? All right. Well, there we go. You try and buy on the 50% and the market spikes through it. Okay. So you're already offside. The next 5-minute candle opened. If you don't hit that 38.2 then, with any aggression, then the market's going to perhaps rally back up. But this is why it's so difficult when you're trying to explain technical trading in real time, because somebody out there has got much more size than I have. So I can't tell you with any confidence which way they're going to drag it before it goes back. They might reject, touching at 38.2. If we get back to the 50%, we can see this just rocket. Okay? But I don't know where you get in. I don't know how to kind of... If we get back to that 50%, it's like, right, okay, I've gone long. All right, fine. We'll just do it. Gone long gold. Enough talking about it. Fake out. Try to fake out. Drag the shorts in. Market going to go to here. Let's see when it tests the 61.8. Okay. 61.8, then it's going to try and go back up. You know, again, it's trying to push below the moving average. You know, it's trying to get all the kind of buyers out of the market, and then it wants to just kind of blip up and convince everyone they're wrong. So difficult. Okay, I'm only trading minimal size, so I'm not particularly fussed about what happens here. So again, we didn't pop up, but we're still really kind of, you know, struggling to get back down. You know, you want that market, you feel like it wants to go back higher. Yes, absolutely. Good call. There's a rate call in New Zealand today. You know, there's been a lot of uncertainty in the market, so will that filter through to the other currencies? You know, maybe watch out on the Aussie dollar for that one. So again, we're still trying to test these lows in gold. You know, we could quite easily get to the bottom of the range before it snaps back up. Doesn't want to. You know, it's very difficult, this, guys. I mean, look, S&P now has rejected all these lows. You know, 1722, it did push through 30 ticks, but it's quickly retraced. Yeah, 1621, 1671. Yeah, a lot of people are thinking, you know. But again, I mean, there's a lot of talk that gold's going to go down. So in the short term, it can be massively manipulated up because everyone's keeping short positions. I mean, I don't know. I don't know what to tell you here, guys. You know, to make it any clearer, any easier. There's nothing out of the Fed today that warrants a really big move. I went for no taper, got the second best thing. We got a restrained 10, but there was no forward guidance to say anything of the respect it was going to carry on. That, you know, the markets were going to, you know, it wasn't kind of so much we want to link it to the 6.5 unemployment threshold. Fine. It seems non-farm payroll is instantly forgotten. So that means really strength should come back into the market because anyone that sold it on the back of that, you know, is not the same as what the Fed base their decisions on. So Euro's bouncing against the dollar, bounced up 1.364, but it's coming back to that point. So that's a point of attraction. You know, gold. Yeah, I don't know, man. It just doesn't look like it wants to continue to sell off to me. Yeah, okay, no present for Ben. You know, I might send him some, you know, some tips on, you know, he'll come and run one of my companies. He can be the chairman of one of my companies. I'm sure he knows a thing or two. But yeah, that's Ben Bernanke's, you know, time gone. Has he been a good chairman of the Federal Committee? I would say he's done as good a job as anybody. You know, the wheels haven't truly fallen off, but it's been tough trading times. So tough one to call, guys. I mean, how's Yellen going to do? Well, she's going to have a big battle, you know, getting her supremacy against, you know, a well-established committee, and also she's still got the problems that if we continue to taper and the data doesn't support, then, you know, things will get tough very, very quickly. So very, very tough, this, guys. Very, very tough. I wouldn't fancy their job, but there we go. I'm not American, so I'm very damn much I get that job anyway. As good a job as anybody. Yeah, well, I mean, there we go. There we go. What else can I say? You know, I'm not trying to put the guy down. I'm much more of a fan of him than I am of Mark Carney. Much more of a fan of him, certainly, than of Mario Draghi. So yes, I think he's done the best under difficult conditions. That's all we can ask of people. So, sorry it wasn't the most profitable of Fed meetings today, guys. You could have bought some gold. And, you know, made some money. You know, again, it was quite choppy. Again, we saw the rejection and the market sold off, but it just doesn't look like it wants to stay down. Again, I called a good level in the S&P, 17250. We had a now bounce up on the way up. Cable's done nothing, literally not moved, so watch for that tomorrow. Aussie dollar, again, back in the lower end of the range. It hasn't got the lower Bollinger Band 0.87267. Euro dollar, again, bouncing off the low, so I might see some little bit of strength come back into the euro versus the dollar. So all in all, nothing's really happened. Nothing's really happened at all. The markets have found it very, very difficult to find any kind of true direction. So it's just kind of picking the extremes of the market and looking for them short-term trades. If you pick a directional trade off the back of this, then it's going to be very, very difficult, guys. Very, very difficult. So Xavier just saying he doubled up on his dollar versus yen trade. Okay, that's good for you. Forex Gal is saying that Thursday US GDP may be a surprise. Yeah, I mean, I think it's all keeping an eye on the data. I mean, obviously US GDP and non-farm payroll. That's what the market's going to focus on now. And yeah, I mean, that's a very good point, actually, Will. Yellow's mentor being James Tobin, somebody's a little bit more kind of, if we had someone like Summers, then it'd be absolutely crazy. We're back to the crazy times of, let's get rid of, regulation in the stock market to make it even easier for people to lose trillions of dollars. So I think Yellen hopefully is going to be, a fairly safe pair of hands and be quite structured. So for me, I think Asia is going to open up stronger. I think we've tried to test lower, and although the markets have every excuse to sold off now, I think we've sold off enough today. So I'd expect really, the S&P to be looking to get back to 1791. Maybe back to a little bit higher. Maybe back to 1800. It just depends, guys. I mean, I'm not pretending to be the world's oracle. I can call things in real time. I can make my opinions, but right now, everyone that's kind of serious money and serious money traders has gone home. Okay, they've gone home to the kids, or they've gone home and thought, do you know what? Let's just see what the next couple of days and the next kind of big datas bring, because I'm not taking a huge position based upon the Fed, cutting another 10 billion. That's what I think's happened. So I think, unfortunately, it's not the most exciting seminar or webinar in the world, but I'm not here to kind of make any, bold statements and not back them up. Gold's retraced our entry point, so we're now back on side. So let's see if gold will just test that 61.8 and blip up. Again, I can only be honest with you guys. It's difficult trading and it's dangerous. I'm a professional risk manager, so I can't tell you anything that I wouldn't do myself. So I can only be honest, and that's all I'll continue to be, is honest and help you guys be the best traders you can. I don't see any long-term opportunities, so just get involved in the extremes of the markets. Okay, that's all you can do now. I would really just bank your money. That's what I'd do. So, realistically for me, that candle's still bullish, okay? So, we might dip down a little bit more, but on the hourly, the next 28 minutes, if we close with that 50%, we'll see a new high in gold. I state my reputation on it, okay? So, we've gone from the 5 minutes to the hourly view now, so if we close above, gold makes a new high. Simple as that. Okay, guys, well, listen, quite a stressful, difficult situation that. Dollar's now kind of, seeing a little bit of strength, so the pound is getting sold off a little bit against the dollar now, so some lower levels to watch out for. That must have just been a little blip in MT4 that's not kind of pushed through just yet. So, yeah, keep an eye, guys, keep an eye. I mean, again, if you see any kind of big movement, any over extensions, then rather than, it sounds daft, but I mean, rather than sell into them, I'd look for, these levels to be hit quickly and buy back into them. Again, gold for me looks like it really wants to close above that 50% and make a new high. But then will it stay up to the highs? No, I don't think so. So, very, very, very tough, guys. Very, very tough. Basic message that's come out of the Fed is they're going to continue on the taper, it looks like. So, although I was wrong against the other analysts, they didn't do anything out of character. They're going to tie it to the 6.5 unemployment kind of threshold. I think they're going to be measured. They're going to give Yellen enough time to bring the quantitative easing into the markets and fully, reduce that taper. But don't be surprised in the rumours, and don't be surprised if non-farm payroll comes in minus, that we don't hear all sorts of crazy accusations and thoughts of what could happen. We're not out of the woods yet, guys. Just because the Fed continues to taper and believe the economy is on the right course, we're not out of the woods. Youth unemployment globally wide is bad. So for me, we're still putting plasters, putting, them little bits of, stone chippings over that hole in the dam. It could still open up and explode. Okay, we're certainly not out of the woods yet. Okay, guys, well, listen, just coming over our time now. So, again, keep your eyes on the markets, look for the extremes and get involved. The call will still be, if we close above the 126 spot 80 in gold, I expect to see a quick test higher, and I don't know he's going to hold on to them gains. Sure. Personally, what I would say, guys, is that, I wouldn't trade anymore personally tonight. It looks too dangerous. But again, wait for to see what the Asian markets do overnight. Wait to see what happens in the morning's trade, and see what people are basing their longer term decisions on. We could see a lot of dollar strength based on this tapering. Okay, it's as simple as that. Because if the US is back on form and they believe that tapering is necessary and also sustainable, then the dollar for me is only going to increase in value. Simple as that. Okay, guys. Well, thanks to FX Street, Maud, Vicky, and the moderators and the guys. Everyone's attended. Sorry that it wasn't the big moneymaker that has been in the past, but keep your eye on the charts, guys. Take a screen print if you want. You can take these levels away with you. They're still going to be in play, and it's been a pleasure. All right, guys. Thanks very much, and I'll see you all very soon.